Hello, traders. Welcome to the live webinar about Elliott waves and price swings and moving averages, fibs, and fractals in general. Thanks for joining. My name is Chris from Elite Currency, and we're going to continue with price swings. We discussed 2 weeks ago how to identify price swings, why they are so important for understanding the chart, the price chart, and understanding the market structure in general. Not only does past price swings give so much information about current price swing, the direction, the character of price, but also the next price swing and not all, but a couple of future price swings as well. So gives you a lot of insight in what to expect now and in the near future. So we wanted to dive into this topic a little bit more in today's webinar, part two, with some practical examples in recent price action, how to use the techniques on actual price charts, live price charts. For that, we're going to use the euro dollar and pound dollar. Of course, as you might know, I am uploading euro dollar, pound dollar analysis bi-weekly on Mondays and Wednesdays with my up-to-date 2 cents on that, my analysis on that. And we're going to dive into some practical details of those charts recently using these price swings idea. As always, before we dive into today's topic, please feel free to use the chat to ask any follow-up questions you would like. And of course, if you're interested in knowing more about my methods and techniques and concepts, then check out SWAT, Simple Wave Analysis and Trading. But it's more than waves. It's more about understanding the chart and price patterns in general. I explain that in my SWAT ebook, with more than 500 pages, available for €24.95, and my SWAT methodology course, which includes also not only the ebook, but 22 recordings with 70 hours, strategies, templates, indicators, PDFs, you name it. So small plugin there for my own course and work if you are interested, of course. So let's now dive into today's topic there. Price swings. So now I'm not sure if anyone followed and how much you followed my euro dollar pound dollar analysis of recent weeks, but let's take a look at that. So you can see on Wednesday, I was looking at a bullish bounce. Personally, I had this fib on. And what I was looking at was basically the fact that we had a 5-wave pattern up here. So that, I think, was the leading information indicating that the bulls were in control and that this is likely a wave A or 1. And that to the downside, we were having some kind of 3-wave pattern that respected the 61.8 fib. I was doing the video somewhere here with the triple bottom at that golden ratio and golden fib, basically now in this case support. So that being probably a wave 2B or 2. So there are a couple of things that led to this conclusion. And one of the first things is the impulse, the fast price action to the upside. Most of this price action was above the 21 EMA, and we had 5 waves to the upside, whereas the downside was a 3-wave pattern, plus all in all, it looked more corrective. The angle of that channel looked more corrective and choppy than the bullish momentum. So those are the couple first things that helped aid this and support this view. The price reaction at that fib level, of course, another factor that helped. And you can see also clear breaks above the above the 21 EMA, but also a lot of price action in the 21 EMA zone, indicating choppiness. Whereas here we had significant price action above the 21 EMA as well. To the downside, a lot less, as you can see. So when price broke above the 20 EMA, that to me signaled the end of the bearish swing and start of the bullish swing, and that's what happened indeed. And we saw that push to the upside. Now, what I didn't expect was the turn here that quick, and I did expect to push to the minus 272 target, a minus 61.8 target in a bigger kind of ABC pattern, like this, blue ABC, because here we had, as I said, 5 waves, here we had 3 waves, and so I expected 5 waves up here, but that didn't happen. So this was, in fact, something that didn't play out. So as you can see, the first part of this analysis pretty much played out as expected, but then something unexpected happened. And that always can happen, of course, even though the breakout above the 20 MA did confirm the upside because there was clearly an upside. In fact, the price did move from this breakout candle. Let's say that this was the confirmation candle, clearly breaking above it and closing above the 20 MA high. Price ultimately moved up to a high that was about 70 pips higher. 70 pips is a decent move and confirms the fact that there was a decent upside. So that was correct, but it didn't go all the way to the main target or the maximum, the targets I had in mind, because it ultimately wasn't able to break the top. So at what point can you recognize that the price patterns are not playing out fully as expected, are not going as far as expected, right? How can you analyze that in real time and update that particular analysis to change one's opinion, even though it looked like at the beginning you're correct, right? You are correct, in fact. Now the question is, how correct are you? How much correct are you, right? And in this case, it didn't go as far as I suspected. At what point can you recognize that? So basically, if this is a wave C, you expect that if this is an ABC zigzag, you expect that the wave C to be in 5 waves. Because price is respected to 61.8 fib, it could be a zigzag, right? If it were deeper, we would expect an ABC flat or maybe an ABCD triangle. You would be expecting a different kind of corrective pattern. In this case, we would expect a zigzag. So we're looking for 5 waves up. So this could be a wave 1, this could be wave 2. So if this is a impulsive swing, we expect this to be a wave 3. Then the correction should be a wave 4. So what do we know about waves 4? Wave 4 should be choppy, corrective. They should respect shallow fibs, and they certainly may not enter the territory of wave 1. So right away we know that if price breaks through the top of wave 1 here, or worst case even here, that's not a wave 1, 2, 3, 4, 5 anymore. So that's for sure. Now we also know if we put a fib from here to here, that wave 4s should be typically lengthy. So we could expect a bull flag pattern to take place, or we could expect a triangle pattern to take place, or we could expect an ABC flat to take place. And time, right? Time should push price sideways. And we would expect price to respect shallow fibs, like the 23.6, 38 fib, maybe max to 50 fib, but typically not any deeper retracement than that. So when price action is showing momentum here, but more importantly, engulfing twins that are really, really a strong volatile pattern, because this 1 hour candle high and low, the difference is about 50 pips, which for the euro dollar is a very substantial, very big pattern, very big candlestick pattern. You could just compare it to the other candles, and you can see that this is a massive kind of pattern. This is not a small kind of 30 or a 15 pip candle. So this is a substantial price action reaction. And the volatility is indicating that price is dropping quickly. We have momentum. We have a strong candlestick pattern. We have a candle close below the 38.2 fib. And later on, we have the break below the 20 MA. So somewhere around here, at the very least, maybe already with the break of this fractal or the break of the 20 MA or the candlestick close, anywhere around there, you could easily see reasons to be very skeptical whether the bulls are pushing this in a wave 3 or whether it's not some other type of wave pattern that is taking place, some other type of price swing that is developing. Okay. So as I mentioned in today's euro-dollar pound video, anyone who took longs in here at the 61.8 fib, or upon the confirmation breakout, or upon maybe some price patterns in here, any entries to the upside in here would be warranted, that haven't taken profit yet in this peak, would be warranted to move the stop loss below this fractal, would be good to move the stop loss to at least break even, if not lock in profit at below the 50 fib, below the 21 EMA low, below the candle low, below the fractal. Because the price information that we see here is indicating a different story than we would normally expect if this were a bullish wave C. This price action is telling that the upside is losing power and steam way too soon, that the price patterns that we expect are not taking place, and that the bears are likely to taking back control. And that doesn't fit the narrative, the swing, the swing sequence that we would expect from a bullish ABC perspective. And because of that, this new information that we see here is indicating, okay, this upside trade that was taken, any upside trade that was taken in this zone made sense at the time, but now it's time to exit because the information from price is showing otherwise. Does that make sense? So this is how new information can be used to update one's analysis, and new price swings are emerging as we speak here, right? So that's how you can do that live. Sometimes that's impossible to know beforehand. We could, I mean, sure, I'm sure there's some traders that were maybe favoring the fact that this could be more a complicated wave B, and that this is maybe wave A, and this is a B, and this is a C of B, and I'm sure there were plenty of traders that thought about that beforehand. I personally didn't give that the kind of the. I didn't think that was the most probable scenario. Otherwise, I would have mentioned it, right? But just because I didn't think about it at this moment doesn't mean that price action here does give me insight and warning signals that my main analysis was partially correct, but that new information is indicating that something else is taking place. So then we can reanalyze it, and we can see that this is probably ABC, that this was an ABC, and we're looking at a bigger correction, an A, a B, ABC with an A, an ABC with an B. And we're looking here at ABC down and an ABC up, and we're probably looking at a wave C down again of a bigger correction. And the wave A here was completed, but the wave B, not yet. The wave B was expanded to a new low. And if we put back the fib on the original high, low high from here to here, you can see that price fell to the next fib. It bounced already at the 50 fib. It bounced at the 61.8 fib. All right, so we can see that the wave A of A bounced at the 50, the wave C of A bounced at the 61. Then we had an ABC up for B, and then the wave C moved down to the 78.6 fib. The wave C went down in 5 waves. So this was a wave probably somewhere here, wave 1, 2. A wave 1, 2, 3, 4, and then 5 probably. I just need to check if the wave 3 is not the shortest. It isn't. So yeah, we had a 5 wave down to complete wave C, hitting the 78, and price has been bouncing. So that's why I said this morning in my Your Dollar Pound Dollar video is that this bounce at 78.6 fib is most likely indicating a breakout, that this candle right here is already breaking above the 28. That is most likely already the start, but the candle break above those candle highs would confirm it. And that's what we had. Basically, any entry here after this candle or after this candle or here at the retracement, any of these purple lines is solidly up at this moment, anywhere between 22 and 44 pips. and still price is ongoing. So I think anyone who took a long setup in in this area could easily move to break even and try to catch the rest of this ride up. So I think that price action was confirming the bounce at the 78.6 fib here with the price reaction to the fib itself. Then we had a higher low, and then we had a break above the 20-MA and a continuation above that 20-MA. And the 20-MA is now bullish, indicating that this bearish swing is probably finished, and we're starting indeed a bullish swing as expected. Now, will it be exactly what I suspect? Will it be an A and that this will complete a B and this will be a C? Time will tell. I suspect so. That's my main analysis. But we'll find out. I also said there's an alternative possible, and that this is an A up, a B down, and we have a C up, and then a D down, and then an E up, and that this is a triangle, or that we have an A, B, C, D, E, and a bearish triangle, and then move up. So it could be both a bullish and a bearish triangle. These are alternative variations that are very real and also quite possible. My main analysis would indicate I still favor more of an ABC kind of pattern up, but certainly a triangle pattern is possible. Certainly that price went down as deep as a 78.6 fib makes it very real and a very almost equally likely or maybe fully equally likely pattern. So that means that the upside could be very limited, because if we get an ABC up that goes towards the previous top but doesn't break the top because a triangle pattern wouldn't break the top, that means that price could hit the 61.8 fib and already move down back to support, then bounce up again towards the 78.88 and then move down again. That means price could be very choppy. So anyone who took trades at the 78.6 fib here at 118.70, or took this pin bar with the higher low at 118.85, or took the breakout here at 119.05, 118.90, 119.11, might be very satisfied with if price just reaches the 61.8 fib, just in case price turns there. That said, if it is a wave C, it might keep pushing up more and more because might be quite impulsive, and this might be the wave 3 of C. So using a trail stop loss below the candle lows could be kind of a sweet compromise between grabbing profit at the most cautious spot, just in case this is a triangle and we're seeing an A pattern and we're getting a B down and a C, versus the chance that this might break and continue higher, because if it's a wave 3 of a C, it's a wave 3 of a bigger wave C zigzag, that this might move up a lot more. So a trail stop loss could be a decent compromise. Depends, from trader to trader, how much risk one takes, and how glad you are with the small profit that's available, maybe at the 61.8 fib. But yeah, that's so some options right there, and each trader will have to assess which of those choices is best. But those are that's the current kind of sentiment. So what kind of price action, what kind of price movement could help us understand what's going on? Well, if we see a fractal, so if we see price failing to break the 61.8 fib, that would indicate that this might be the end of upside. If we see candles, however, closing above the 61.8 fib and price staying above the 20-MA, that could indicate momentum and further kind of push higher. So this is how there's this constant best case, let's say best guess at this moment, best analysis, but new information is coming in, and that new information can continuously be used to update our current kind of analysis about the current price swing and what scenario is most likely, and how that could impact any potential trades at that moment, if there are any trades or potential trades or current trades that are open, and any trade management decisions. Here too, with regard to this downside, how do you know this downside is over? When the 5-wave pattern is finished, so there was divergence between these bottoms. We had, for instance, 5 to 6 candles here not breaking the low. We had a bullish bounce at a crucial, important 78.6 fib. We had a pin bar marking a higher low here. Then we had a very strong bullish candle closing above the 20 minute. I said that in the live video that could already be a confirmation. And I said the next candle breaking above that could be extra confirmation. That's this one. So all of that helps indicate that this bearish swing is over in real time, and helps us analyze that. All right. So to recap, wave patterns, chart patterns, time patterns, Fibonacci levels, support and resistance levels, correction impulse, fractals, moving averages, all of that information combined provides us with a roadmap to understand, what direction is most likely, when, at what point is that direction confirmed, how far can price move, and what obstacles, what points are important that could confirm or invalidate certain analysis. So at this moment, right, the bullish upside was correct, but it was a wave C, not a wave 3, right? So the upside was correct, but the length was incorrect. So the fact that the time patterns didn't match up, we didn't see a bull flag, for instance, and the depth or the strength of price reaction to the downside, all of that information with the fractals and the double top here, the break below the moving averages, indicating that the upside was not as strong as expected. So that information helped me update my expectations in real time to change my thoughts, to adapt to what's going on in reality here, and make the analysis more accurate by changing it and adapting it to what I'm seeing, right? So all of that, as I mentioned, wave patterns, chart patterns, time patterns, fibs, moving averages, fractals, helps helps digest and analyze past and current swings to understand the path of least resistance and what is likely the next step, the current step and next step, and how best to adapt that to the trading plan. Okay. So I hope that helps. This was a live example. I tried to provide more concrete examples of what we discussed 2 weeks ago. With the pound dollar, was pretty much the same. So we had a 5-wave down. We expect an ABC up, and we had a 5-wave up, part of A, and we had ABC down. We thought this is the end of B, so we expect a C up, and we got the push up. But the double top and then a strong fall, indicating that this is not a wave 3. ABC pattern up, more likely. Therefore, this ABC down didn't finish wave B, but rather wave A of B, this ABC up, a B of B, and this 5-wave down, a C of B. And we said that if price stays above this trend line, that is likely to be in bullish territory. So we had a move up, we had a strong move down, but despite the strength of the downside, it didn't break the previous low, it didn't break the trend line, and we had an exact bounce at that trend line and price moving up again. So far, the bullish scenario is still intact, not invalidated. And you can see that the higher low would have been an excellent kind of moment or zone for a long setup. And I think Neta actually took a setup himself with ECS Live. The confirmation, though, of an upside still could take place with the break above the 20 MA here for that breakout to the upside. That could confirm the larger bullish swing, basically. But yeah, that's how you can use all of these ingredients to combine them to make a best case analysis and use that when the odds are in our favor as traders, right? Not at every point is it a good idea to trade. At some point, it's better maybe to wait for more information and wait for those setups that have the best edge and best probabilities. Focus on those. Keep the trade open until we think that the odds are still in our favor. But if we see that price swings are, that there's more and more information that price swings are going against us, then of course we can use trade management to update the trades as best as we can. Okay, so yeah, practical webinar today. I hope it helps. We'll be back 2 weeks from now, and once again, check out our elitecurrency.com website for a lot of good info there on a daily basis, webinars, analysis, articles, education articles, and of course, check out our automated trading systems or SWAT for the ebook or course. And wish you all, above all, great trading and of course, a great week ahead. Cheers, bye-bye.